folks, this is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Market-wise, let's take a look at it out here. You have the Dow down 20, Nasdaq's up 8, S&Ps are off 3.5. Gold contract down $3.80, trading at $1,299 an ounce. Silver up 5 cents at $20.62 an ounce. Platinum off 5 at $1,482 an ounce. Copper down 2.5 pennies at $3.22 a pound. Light sweet crude down 78 cents at $100.89 a barrel. Bonds. Check it out, folks. The 10-year is up 8 ticks at 125.12. 30-year 21 ticks at 138.30. King dollar up 193 ticks at 81.31. The euro is off 28 at 134, and the yen's trading out there up 26 at 102.12. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Now, in the world of the markets, let's take a look at them. What do you have? The surprises, folks, are going to be to the downside out here. What we have is this. Yesterday, you went to a lower low. It rejected lower price, and it had lighter volume. The bottom line, we were going, the cash S&P, we got down to 1967. The 1967 was going into the July 17th bar. The July 17th bar had a lot more volume than we came down in yesterday. So it rejected that level, had lighter volume. You get a bounce. Guess what? Bounce out here today's on lighter volume. What you also have, and check this out, intraday. If you happen to be watching Tiger TV, and Tiger TV, folks, is very easy to get. Just go to TFNN.com, and on the right-hand side, you will see the actual TV playing right now. The voice isn't on that TV, so that people don't have to worry about when you're pulling up a page, you start yapping on the page. Bottom line, you hit that button, you bring up Tiger TV. What I'm going to show you here first is this. This market is rolling, number one, but it's not unique in the aspect of how it's rolling. What it's doing is that it's basically moving from number to number exactly like a normal market versus a Fed-induced market, or whatever folks want to basically say as markets go higher. You know, we know we've been higher, no volume behind the move, and all of the above. The bottom line, what you're going to see is that this, I don't expect a pullback like we had in 2007, that's for sure. But this market is a trader's paradise right now. I mean big time, too, not in a small way. I don't encourage day trading, but bottom line is if you are a swing trader, even on a weekly basis, monthly basis, whatever that is, pay attention, because what has happened is that the price, the volume, they're hitting left and right all over the place, intraday, daily, weekly, you name it. If we take a look at the cash S&Ps, the S&Ps right now, what I'm going to do first is I'm going to put them on a 3-day, so you can see what we had this morning first off. So your first expansion on the way up this morning, this is what you have. At 10:20, you got to a price point up there, the S&Ps, 1979. We did that, folks, on a 10-minute basis with 37,000 contracts. Well, guess what? That 37,000 contracts was going into 98,000 contracts. It's like not even close. Can't handle that. So what does it do? Comes off that level, and then boom, volume comes out of the move on the way downtown. 72,000 contracts on the way down. Now I'm going to flip this to just a 2-day for a second so I can show you how this works out. So, first off, you're going into a higher volume characteristic. You can't handle it. Market can't handle it. It pulls back. Well, then what is it going to do? It's going to go back down to where you had basically a high volume low. Well, we had the high volume low at 1,100 hours yesterday, 10:20 to be exact, at the 1960 area. That characteristic, the first leg down was 77,000 contracts on the, actually more than that, 77,000 contracts on the way down. Okay, so watch what happened. This morning at 10:50, your first leg down had 72,000. Your second leg down, what was going to test it, was 69,000. You go lower. You come into the bar with 54,000. So you got to 1967 with 54,000, and you go into 1963, which had the 77. You get another bounce. Now watch this bounce. It's so cool. It's insane. The bounce itself just came up to ice when you're basically looking at the market as to what did it do. And ice is where the downdraft started. You get that fast expansion with volume, expansion with price. We get up there, and it stays up there for 15 minutes. It stays up there, folks, with 8,000 contracts. At 1240, it had 14,000 contracts. At 1250, it had 8,000 contracts. At 1,300 hours, it had 15,000 contracts. Stayed up there for until, let's see, yeah, until 1350. So we stayed up there for an hour and 15 minutes. And then guess what? Ba-boom! See ya. Don't want to be ya. 58,000 contracts on the way down. The 58,000 contracts bought you to a price point of the 1968. You're at 1969 right now. Bottom line is that what I expect you're going to see out here is this. Okay, so now we got, 45 minutes left in trading. What you're going to have, if we bring this into the SPY for a second, is that now what you're going to, the correlation out here today is this. You are going to have 56 million shares that was going into 76 million shares, and what the market is basically looking for, which it looks to me like we're going to get real easy, is that a close in the SPY under 198.26. We hit 198.45. That'll be a test of that level, meaning even high. It's just, oh, this is pretty sick. Oh, this is really sick, actually. So check this out. I love this. We not only got over the downdraft that was on the 25th, but we got right to the bottom of the high, which is 198.45. We hit that right to the tick. That's crazy when that happens. It's just nuts. But bottom line is it did. So what does that line up for us right now? Okay, well, that lines up that you're going to have a failure there. Let's walk through the gold market next. We're going to walk through all these markets. Gold, what do we have with gold? Now, this is really interesting with gold. GCQ4. So I just finished the gold report. The gold report's going out, and if you do get the gold report, check it out, because there is a buy in that gold report today. We own about a half dozen equities right now. There's one more today. But I'm going to walk you through this for a little, because we have some divergence. And watch what it is here. Inside the gold market itself, we're down $3. The volume's not bad. The volume right now is 169,000. You know, that 169, you can say, is pushing into 179. The larger issue is that it's pushing into the day of strength, which is 238. That's in the contract itself. If we go over to the XAU and the HUI, what you're going to see is this. XAU and the HUI are at higher prices than they've been the last couple of days. However, I suspect at the end of the day, they're not going to have a lot of volume. And this is where the divergence is taking place right now. A lot of the gold and silver equities are refusing to back off their highs. What is also going on, though, is that at these highs, they are going to need more volume to sustain price. So, little tricky here, but I'll watch how this shakes out. Well, I'm speculating how this is going to shake out. So, when you stay at highs, let me bring up GOLD for a second, show you how this shakes out. So, GOLD right now, Rango Resources, has been at these highs for approximately 3 trading weeks. The high out there is 89.89. You know, we haven't hit that, but that has volume up there. Today, it's like, oh, man, you know, you need more volume. You had 313,000. Yesterday, we did 380. You know, really, to get up into over highs, we need about 1.5 million. This phenomena here, right, is in about half the gold stocks right now, folks. Most times when you see something like this, and now this is the kicker, that we know we have a higher high with volume. This is telling me that there's going to be a very large ABC structure up. It's building costs to blow through all those areas, and we will get the volume in this market. Our phone number is 877-927-6648. This is Tom O'Brien. This is TFNN. Give us a call, folks. Come right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have Honeywell down $1.06. You get Ma Bell. Oh, Ma Bell's got an expansion upside. It actually looks like an ABC up. That's up $1 right now. We get ExxonMobil off 45 cents. You get DuPont up $1.10. Let's go to Mike in California. Hey, Mike, what's going on?
Oh, not very much. How you doing?
I'm doing great, man. Thanks for calling. Thanks for holding.
Yeah, this is more of a general question. It may not be in your area of expertise, but hopefully you can at least put me in the right direction. Everyone keeps talking about the Fed shrinking their balance sheet. Now, whether they sell their bonds or let them mature, which is what I think they will do, they're going to replace the bond with cash, so the net change, the way I look at it, would be zero. So how does the balance sheet shrink? And, the reason I'm asking is obviously this will have a big impact about the markets and bonds and everything else. So,
well, so watch and I agree with you. There's no reason for the Fed to sell their bonds. Okay,
right. I agree with that.
So the bottom line is that when they expire, they expire. End of story.
But they get cash for that bond, though. When it matures, they're going to get the cash equivalent back onto their balance sheet. Or do they turn that money into the Treasury?
That would be profits. That's profits every year that goes into the Treasury.
Well, even though they're just getting face value, let's say it's a $10,000 bond. I'm sure they deal in much larger.
That's going to be profit. Yeah, so watch. Let's walk through it. We'll just walk through. Let's say it's $1 million, okay?
Okay, fine.
So let's say we get the Fed. The Fed's got $1 million out there. And I'll just put it, let's say it's at 5% or something, okay? We know it's a lot less than that, but let's just say it's 5%, okay? So bottom line, when that expires, okay, they've got their interest on 5%. They get their cash back. Whatever profit the Fed, it goes back to the Treasury at the end of the year. End of story. It's off their balance sheet.
Okay, because they've talked about the Fed keeping the money and basically either reinvesting it in more bonds, and that way, even though they may stop and probably are going to finish the taper in October, they could then put that money back into new bonds, and that in itself will keep interest rates low, even though they've officially no longer buying bonds.
Well, okay, they have done that. They inside that. The plan that they have right now, they roll it over and they can roll it into new. There's no doubt about that. Okay,
right.
When they decide though to finish, my take on this whole thing is that they're going to not sell it. It cracks me up actually when you hear market participants turn around and say they have to sell their bonds. When you hear someone say they have to sell their bonds, folks, and they're supposedly running big money. They've never traded. They don't even understand like the concept. It's like, why? Just picture yourself. Put yourself in that same position.
Yeah, I agree with you, Tom. Okay. I don't think they're going to sell either, so it wouldn't make any sense.
So watch. So, exactly, it doesn't make any sense. So they turn around. It comes off their balance sheet. It goes into the Treasury, and that's it. But there's a bigger deal out here. Not a bigger deal out here also, is that what you also have happening, and this is what you want to wrap your head around a bit, folks, okay, is the amount of cash in the world and the amount of cash in the world that is chasing yield, okay? And, that's why when I go through what other countries are paying for yield, it's important to understand because it's not you and I that are moving rates here, okay? But what can move rates in supply and demand aspect is large institutions. And the key is going to be like when we're looking at the 10-year right now, let's say, okay, the 10-year is at 2.4. Do you want to give your money to the United States at 2.4, or do you want to give it to France at 1.5 and have the euro? So picture this, folks. What you have happening right now, the dollar's going up, the euro's going down, and the European countries pay less interest than we do. So you're losing both ways. So that comes into play. Now, check this out. The last one that comes into play is really a kicker. And the kicker there is that our deficit is going down and going down dramatically versus going up. So what has also happened there is that there are less bonds being issued. So what happens there is that the supply and demand dynamic is coming into place, that the supply is going down, the demand is going up, and the bottom line is that that's, to me, a classic out of time in the trade. And guess what? If you have more demand and less supply, what's going to happen?
I think you're right. We're going to go. Oh, sorry. Go ahead.
No, and that's not even saying that the market goes south. This market goes south, and you're going to see a launch into bonds that are going to be unbelievable. So.
Yeah, well, I agree with you. I think we're going towards 2%. That's why I don't think the market's going to tank. It may correct, but with interest rates going down, I don't think it's going to tank.
Well, I get the chicken and egg deal on that one. Do you know what I mean? It's like if I suspect that the run down to 2% is the market tanking.
Oh, okay.
Because there's what you have out here too, folks, is that there's a huge differential inside right now what financial assets are actually worth versus what Mr. and Mrs. Smith and Mr. and Mrs. Dow is making in the economy. You know, because the reality is that if you are not in some type of asset in the last 5 or 6 years, you don't have any more money. If you are in assets in the last 5 or 6 years, what has happened is that your net worth has gone up exponentially. You know, it probably, you know, if you had kept it, it was down exponentially also. But, you know, there's certain areas that have gone up exponentially also. So.
Okay, well, that's a good discussion. Thanks very much for your time. Okay,
man. Have a great one. Have a safe one.
You too. Bye.
And as one of our tigers, actually, our chief bond tiger inside the den, you know, is in there right now talking on it. We get such a great education off Mark, and we really appreciate that, man. You know, tomorrow, no doubt, with the Fed, we're going to know, you know, where this baby wants to go. Because what we do have on a technical basis is that you're right at the top of the range. You know, today the 30-year is at 138 to 31. You know, my take, you know, a technical basis that it already took out the swing point with volume. That's telling me we're going to 142. The 10-year is just getting up to its May 29th swing area. The May 29th swing area is 125, 126. We're at 125.12 right now. And we're coming into that area with volume. We've done 1 million contracts thus far. You know, slight expansion in the last few days. In order to blow that away, you're going to need about 1.3, 1.5 million contracts. You know, I suspect that's exactly what we're going to see out here. So, now, is that a correlation inside the aspect of the market going down, or just more demand for bonds, or, in fact, the amount of conflict that we have in Europe, in Russia, and all of the above? They had more sanctions today, but they're just basically kidding themselves over in Europe, folks, about sanctions versus what Putin wants to do. You know, Putin's going to roll over, you know, a few more countries, folks, okay? So the bottom line, I'm speculating that, but, you know, Putin is not going to stop. You know, this is a classic warrior that absolutely knows how to play his cards against folks that have zero guts. That's what it really comes down to. What you do, you go in, you knock them out, pull back a little, say, oh, everything's all right, go in, bang, hit him again, pull back again, and then the third one, guess what? You not only hit him, you hit him 5 or 6 times and knock a few more of them out and say, game over. Now you're going to do this. We get this trouble coming down the pike here. You stay there, we'll come right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full custom optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. The Dow right now is down 45. Nasdaq's up 4. S&Ps are off 6. Don't forget, folks, at TFNN, we start programming each and every trading day at 8 a.m. We go from 8 to 6 o'clock in the afternoon. My hours have changed from 4 to 6 to 3 to 5. All that programming you can get at TFNN.mobi. If you just want audio, if you would like the Tiger TV and get the full video, just go to TFNN.com. On the right-hand side, you're going to see the TV right there. Click that TV. And if you do enjoy the programming, folks, please tell 3 people. We really appreciate it. Let's go over to this S&P right now coming into the close, because I can tell you, I love doing this program when the market's open too, folks. Well, why? Well, because what ends up happening is that you can see how markets move when they're opened and what to expect. So when we take a look at this S&P, the future S&P, what you're looking at is this. The last swing point where we had volume on the way down, 1967.25. You had 54,000 contracts traded, okay? So check it out. When I do these, folks, I do 10-minute charts on a daily basis. That's what I'm looking for consistency. So what do we have right now? We are at 1967.25, same area. We've done thus far 27,000 contracts. And what that means is this: we're 4 minutes left into that bar. Now, that means, number one, it can do the numbers. It's going to be close, but that can do 55,000 because when the commercial was on, it was actually 5 minutes, and it was at 22,000. What do you have? So what do you look for next? Okay, you look for two different things. At the end of the 10-minute bar, you're going to be looking for a close under the 1967.25. That's the first part. Second part, you have a volume characteristic that's more than 54,000. You get that. Guess what you get? A to B equals C to D. You get a run all the way down to the lows that were established yesterday at the 1960 area, and that would be another 8 points down in the S&P. So let's see. You got to love it. I love it. 30. We get 23 minutes coming into the close. You get volatility coming back in the market. If we go look at the VIX, what you're going to have, thanks, Terry, for pointing that out. The VIX right now is at 12.97. And what is that saying? That's saying nervousness is starting to come into the marketplace. The spike on the 17th got it right up to 1538. And this is not a vehicle I like to trade, folks, because the volatility has to come in first, and the spike's extraordinary. But bottom line, when the volatility does come into the marketplace, and in fact, when the VIX gets higher, the market's already crushed. But what it does do, it gives you an indication that there's buying protection, and they're buying protection very quickly. Now, let's go over to Ma Bell, because I'm going to show you what came down here. This is pretty cool. So Ma Bell today, what does it do? First off, all the phone companies, well, I guess Ma Bell, Verizon, they've all been doing great. They've been going up in volume, back with lighter volume, all the above. What Ma Bell has done out here today is this. She went to a price point at $37.48. She's going to do, for the week, way over the last swing point. Right now, we're only on Tuesday, and she's done 104 million shares. The swing point that we're talking about is 109 million. So what that's telling me, first off, is Ma Bell, bottom line, wants to run all the way up to 38.80. Now, let me bring this back 10 years. So the 38.80 is the last swing point that was established in October of 2012. You launch that area, guess what? Ma Bell's going to 42.96. That's the way this thing is set up right now. That's on a technical basis. Fundamentally, this is what's going on fundamentally, is that what had happened is that Windstream basically showed the blueprint of how these phone companies can make even more money. And what that's about is this, is that Windstream, okay, AT&T Verizon led a rally in phone service after Windstream Holdings announced plans to spin off that provides a blueprint companies could use to reduce their tax bill. Windstream plans to turn its copper and fiber networks, along with other assets, into a publicly traded REIT, which doesn't have to pay federal taxes. The bottom line is that what you're going to see out here is this, is that Ma Bell, Verizon, they're going to turn the real estate aspect of their wires into a REIT that immediately stops double taxation. Bottom line, spin it out, financial engineering to the hilt, and that in itself has pushed Ma Bell higher. Let's go see what Verizon is doing, VZ. So Verizon out here, oh man, look at this. This is a beautiful thing. I happen to own these stocks too. In fact, I've owned them forever. My mother gave them to me. And I still have the actual certificates. I actually, I get them in the office too. I should show you these. I got some certificates going back to like 1963, I think. Okay, so let's take a look at this. Verizon, up 55 cents at 52.12. This, oh, isn't this cool? So check this out. This is actually going into monthly. Let me bring it back 15 years. Bring it back 20 years. Okay, no, she has higher to go. Okay, so Verizon's high was $62. You're at 52. I'll put this on a quarterly for 25 years. Okay, so here we go. A quarterly in 25 years. Oh, this is pretty cool. It's already into, it actually just hit the lows of the high of 1999 today, folks. And the volume is monster. If you actually want to see something about how, and if you have my book, The Art of Time to Trade, you know that if you stop pushing with volume before the swing point, it likes to go. This is pretty sick. The March, this thing pushed with extraordinary volume, 2.5 billion. She is going into the last swing point out here, which is 54.31, 860. Well, we're only at the beginning of the quarter. This is a quarterly, but it looks to me like she's going up to her highs. So these phone companies, no doubt, you know, they're not only making money, I suspect they're going to be basically making a lot more money. That aspect, just pushing that off. Let's go take a look at some of the high-volume stocks, even though we don't have any high volume. This would be high-volume stocks in the market today. Windstream is up at $1.28. That's up 10%. You have Frontier Communications up 98 cents. CenturyLink, oh, look at all the phone companies. They're all going to push them out. They'll push those REITs out quick. That's up 2.22. You get Facebook down $1. Corning is down $2. And in fact, you know, our man, Mr. Dave White, folks, okay, you want to, you know, basically check out his great newsletter. He actually had Corning in his newsletter, and that baby, that's a short position. That thing was down 2.12 today. I'm sure when I do the show with him on Friday, he'll talk about it. More than likely, it's GLW. It's probably a high that was up there with dramatically lighter volume, testing something. In fact, let's bring that back and see what he was looking at. Oh, yeah, that's what he's looking at. So check it out. Oh, my God. So the downdraft that was created out here in 08, 2094 had 535 million, and it was going into that with 154 million. See ya. Don't want to be down a couple bucks right now. Oh, he's telling me his fundamental reasons. Fundamental. I don't think he knows how to spell fundamental. Only kid, Dave. 877-927-6648. We have the Dow right now down 40. Nasdaq's up 4. S&P's down 6. Gold equity. So check this out, folks. There's the divergence that's out here is, it's tricky, but I think it's pretty cool. And what it is, they're hanging at highs. Not all of them. Oh, yeah, actually, here, let me show you something here, because there's a little. Now we own Hecla, but I want to show you that Hecla. Hecla is actually pushing with volume, which in this case today is really positive because the rest of them are pushing with lighter volume. So Hecla did 5 million shares today. It's 4.9 yesterday. It's 5.5. That's pushing with volume. It's like, okay, man, what is the difference here with Hecla pushing with volume versus, and in fact, and I own GPL too. Now GPL is going to need more volume. GPL's at 133. She's going to need more volume. She's done 365,000 today. Yesterday was 543. So we have divergence in that market. My take, though, bottom line, is that it's been building cause for 3 weeks, and we are going topside, and this is going to be a fast and furious expansion in those gold and silver equities. And we'll see what's going to make it happen. But the way that it's just set up, in fact, the GLD set up like that, too. The GLD and the actual contract is set up really sweet. So check this out. The GLD back 38 cents today on 4 million shares, 4.5 million versus 24 million. That's what we like to see. And it's just not one day. Okay, if we take a look at what it went into when you're talking about the 25th, you get 4.5 versus 5.6. We go back down to the last swing low, it's 4.5 versus 10.5. The day of strength, it's even heavier. The day of strength, you're talking 4.5 versus that big monster there at 24. So, bottom line is that, lower prices are coming at us, and the aspect of one of the targets saying the president's talking right now. The president is not the one that's putting this market down, I can tell you that. What may happen here is that, the market might start paying attention to Europe in a whole heap of trouble, and Putin wanting to basically, not wanting to, he will take over the rest of this whole deal over here, folks. And the people are just sitting on the sidelines, and they're worrying about their pocketbook instead of worrying about freedom. It's Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. We have the Dow finish. The Dow's down 57. Nasdaq's off.
Tom O'Brien.
Welcome back, folks. We have the Dow right now off 41. Nasdaq's up 2. S&Ps are off 5.5. You get gold off 310. And bonds, you get the 10-year up 8. The 30-year is up 20. We go over and we take a look at the SPY. If you want to see the SPY, SPY on an intraday basis, what you're going to see is that at 10:20 this morning, 11 o'clock this morning, you went down to the price point of this 197.24. You did 2.6 million shares. Guess what? It broke that at 15:30 today with 4.2. What does that set up? That sets up a run right down to the bottom, folks, of that 196.62. What you're going to have inside the SPY today is a failure on price, on volume. The market itself, it looks like, is also going to do the same thing. Right now, with 8 minutes left before the close, we're doing 453 million on the NYSE. That'll bump up to probably about 600 million. It'll do 150 million at the close. We take a look at the NASDAQ. The NASDAQ right now, she has 1.8. And the NASDAQ, I suspect, will get up somewhere into the 2.1 billion. And that's still not going to be enough. Why? Because what you had here is that that's going to be a failure. Oh, this is twice. This is twice. This is interesting. So the NASDAQ today, the composite, got to 4470. That 4470, got over the high that was generated on the 25th. That's where we came down. It's going to close underneath that, as well as it's going to close underneath. Yeah, it is. It looks like it's going to close also underneath the 8th. And that would be 3 more points down if the NASDAQ actually goes negative. Right now we're at 4447. You get into 4443, it's actually it's definitely more bearish then, because that's what you've done. It's right across the board. The last 2 downdrafts, you've got over them, have lighter volume, closed underneath them. I'm sure that tomorrow we're going to have, the Fed's going to have their hands full on the statement, because of the fact that you have so many moving parts in the world right now. That's going to basically, we'll find out whether that's actually going to be in the statement itself, but there's a lot of moving parts out here. There's no 2 ways about it. Now, let's go over to the housing market for a second, because I want to show you something in Lennar. And this is setting up really nice. Lennar is down 10 cents right now, trading at 37.53. We put this up. I put this up on a weekly basis. Now, the buy's not here yet, okay? In fact, I'll put it up on a monthly basis so you can see how this is shaking out. But what you do have is this. Lennar had an expansion. October is a $12 stock, October of 2011. Goes all the way up to 42, pulls back with volume, but not as heavy as, the way up. $30, folks. $30, you want to be all over Lennar. 30.95. I expect you're going to get back to that level. It's pulling back now on a monthly basis. Let's see. Yeah, it's 52 million. It's nice. 52 million is backing into 171. I suspect what you are going to have is it is going to get lower price by a big amount. $7, another 30%, 20%. But that's where it looks to me like it's going. And all that's going to be is a normal pullback in a market that wants to go higher, by the way. That's what's so cool about this, because if you take this and we put this on as to see, what it's done, check this out, at $30, that's still not even a 50% retracement of the move. In fact, $31 and $31.41 is only a 0.382 of the move that went higher. So it's wild watching this whole thing shake out. What is intriguing is that when you talk about real estate, we talk about how things move around. We have the Tiger Real Estate Opportunity Fund. We do business in Pinellas County. And it's really cool between the Case Shiller that came out today. The largest market, the largest uptick was in Tampa, right in the whole country. Now, that's not the largest in the aspect of the last 3 years. That's the largest, though, in the last year. But that's not the only kicker. So check this out. In the state of Florida, this came out last night. In the state of Florida, Pinellas County, where we are, the 4 out of the top 10 counties that the amount of jobs and the amount of actually money being made is Clearwater, Lago, Dunedin, and there was one other place. If you want a nice place to live, folks, come on down to St. Pete, Clearwater. It's happening down here, and it's happening down here, to the fact of how I saw it happen in Boston you know, over 30 years ago. You know, if you don't remember, folks think that Boston was always like it is now. Wasn't even close. Not even close. But it's happening. There's a huge amount of young people that are moving in here. The jobs are coming in. It's happening. You know, you're starting out in life, or you want some action, go live downtown St. Pete. It's phenomenal. It absolutely is. Okay, what do we have out here? I know, Mitch, you got to come down and visit us, man. Bring that family down. No doubt, man. I'm telling you. Okay, so let's go take a look at that S&P again. You're going to love it. Okay, we take a ESU. Coming into the close, what do we have here? Let's see. ESU 4. Here she comes. Okay, so we're at 1966. The low of yesterday is at 1960. Look at the spike. Oh, man, the last 10 minutes. The spike 10 minutes ago was 58,000. So you have an expansion of volume happening. What time is it? Okay, so you get 3 more minutes on this bar. They're going to push this down, folks. This is going to push right into the close. And I can tell you, if you weren't around in 2007, or if you haven't been around when markets move, folks, okay, you know, get your price and volume going, get your fib numbers going, get all the rest of them, because they're hitting left and right. You know, there's just, and what you want to understand is that the type of trading that you're doing, make sure that you're also taking it off the mark, taking it off, putting it back on, taking it off, putting it back on. If you haven't test drove the Nadex product yet, get over there and test drive it. This is the ultimate to test drive that Nadex product, folks. So you go to TFNN, you see the Nadex banner on the top and the side. You can hit that banner, bring up the account, and put $25,000 of funny money into your account, and you got action. We get a question whether the TBT, the Ultrashot 20-year bond, is ready to buy. Are you kidding me? I'm a bull. Can't you see my horns in the bond market? I'm a bull. I get those big horns. I get 5 different horns coming out of my head in that bond market. This is Tom O'Brien. This is TFNN. If you'd like to test drive my daily newsletter, you can do it right here, right now, absolutely free, 2 weeks. Go to TFNN, you go to newsletters, go to the Market Insights, can test drive it right here, right now. You stay right there, folks. We're going to come right back. We have the Dow down 52. NASDAQ flat. S&Ps are down 7.5. We're going to be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This is one of our Believe cards. The author is unknown. Dare to believe. It's where it's at, baby. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We had the Dow down 70, NASDAQ off 2.5, S&P's off 10, gold contract down $3.50, traded at $1,299 an ounce. Silver up 6 cents at $20.63 an ounce. Platinum off 8 at $1,480 an ounce. Copper down 2 pennies at $3.22 a pound. Light sweet crude off 80 cents at $100.89 a barrel. Bonds. We have the 10-year up 8 ticks at 125.12. 30-year up 20 ticks at 138.29. King dollar up 193 ticks at 81.31. The euro off 31 at 134, and the yen trading out there at 102.12. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? You got to 1984. You closed at 1972. And what does that do, folks? That gives you a failure right across the board. And when I say right across the board, we're going all the way back to the July 8th time frame. July 8th, beginning of that downdraft was 1976. You got over it, closed underneath it. 2 days ago, 1984. Get over it. He loved this one, too. Then it was 1984.60. Got to 1984.85. Get over it, closed underneath it. Bottom line, we're going to see now, you're going to see the expansion down in 1955 inside the cash S&P. If you take a look at the actual SPY, and you had me listen last hour, you're going to see it was a classic. A to B equals C to D, broke the B point, broke it with volume. Intraday, the B point that we were talking about was at 11:30 a.m. this morning. 2.6 million shares are traded, 127.24. Bottom line, takes it out with volume, 4.2 million. And as we get into the close, it just kept expanding. You had 4.2 million 10 minutes before, 3.8. And then last 10 minutes, 6.3 million. The 6.3 million, folks, was gunning for the low of yesterday at 10:20 a.m., which was 196.62. Right now, we're at 196.95. Bottom line, you're going to see that expansion. I expect it's going to be a little fast, furious, all of the above tomorrow. That's your S&P. NASDAQ Composite. Now, check out the Composite, because the Composite was a monster failure also. And this is what you have with the Composite. The Composite got to a price point today of 4470. We did volume of 2 billion shares. The 4470, 4442 actually got also under the 8th, which is very hard to do, by the way, because that was 4443. Bottom line, failure across the board. What does that set up? That sets up in the NASDAQ Composite 4351. That's going to be the next number that this little baby wants to fire off at. We take a look at the NDX 100, the 3 Qs, same deal there. We got to a price point of 97.20. You closed at 96.60. You got over the downdraft that was out there with 29 million, did 26 million. We'll see what type of expansion of volume we have in the Qs as that baby tries to get to lower price. Gold contract, what you have with gold is this. She is building cars, my take on this, for higher price. We did 171 million shares contracts out here today. We're at 1,300. She's coming into the monster day of strength that we had. She's going to have to get a lot more downside volume in order to basically crack that. It's 238,000 contracts that she is going into. Bonds, tomorrow, Fed meeting started today. The bonds tomorrow, no doubt. Volatility, no doubt, is going to be high in the morning. GDP is in the morning, 8:30. The Fed statement comes out in the afternoon. The 10-year bond right now, folks, did 1 million contracts today, 1,006,000 contracts. She's going after the 126 level. We're at 125 a level. That baby is set up to go to 128. That's going to bring the yield down to a 2.2. Right now, at 2.458. The 30-year, it's already happened. The 30-year has already taken out its swing point, had the volume behind the move. The top of the 30-year swing point was 138.10. We're at 138.29 right now. That 30-year wants to go up to the 40 price point. Now, let's go over to King Dollar, because it's intriguing what's happening to King Dollar. King Dollar got another huge move out here today. We are at 81.30. 81.50 is the next move. That's on the short-term basis, folks. On a longer-term basis, what you have with King Dollar, let me put this on a continuous contract so you can see how this is set up. Because we put this on a 10-year contract. What you're going to see is this, is that the 81.50, is a decent move. That's the last swing points out here. But your spike move is 84.90. And, we've been at the same area. We've been at the same area now for almost a year. And how we move into that 81.90 is going to be huge. The reason being is that if you get volume, this could have been an ABC structure on the way up. That will, in fact, bring you up to 89.71. That is a monster move. After the close out here, let's take a look at Twitter. TWTR, they just come out with numbers. Twitter closed at 38. She's trading at 47. What's up? That's up $9. Let's see what Twitter has to say. They, let's see, they were looking for a loss of second quarter adjusted revenue. They were looking for a loss of 1 cent, and it looks like they made 2 cents. So it's a big number. Shares are up 17% after the close, And if we take a look at this, so she's up at 47. We put this back. She's got a long way to go. She's only been one way. She's gone down from 74, though. Buffalo Wild Wings, BWLD. So Buffalo Wild Wings closed at 167. She's down $10. That's a hit. It makes sense she's down $10, but look at the last time she had any volume was out there at 143, so she's going to go lower than $10. We put this back on a weekly, and this is a classic. This is a classic high with no volume. It certainly is. So we're at 157 right now, and 143 is game. Let's see what numbers they're saying. So number-wise, their earnings per share is $1.25. Their revenue is $366 million. They beat. The bottom line is that they beat, but they don't like something that's in there. Panera, P-N-R-A, P-N-R-A. So let's take a look at Panera Bread. Panera closed at 146.62. She's trading at 143. And that's lower lows coming at you. So we take a look at this. We put this on a 2-year. Oh, look at this. It's getting killed, too. Yeah, you have a whole new dynamic happening. This is a... Ooh, Panera can really go low. What the heck's happening with Panera? So check this out. Well, you can see what's happening with Panera. Panera with high with light volume. It's going lower with volume expanding. Man, if you're in Panera, folks, just get a stop in. This is like a mess. What the heck's happening with Panera? You know, this is pretty sick. So Panera's at 146 right now. 142 being down. Panera, $100 is the next move, but she's hanging. She's got something out there at $65. That's like absolutely amazing, but that's what it's saying. Move. They supply online media technology to the real estate industry. That closed at $14.53. That is trading right now at $13.50. And, you know, we take a look at this equity right here. Put this up on a 2-year basis. $13.50. Yeah, she looks like she wants to basically run down a little too. She's gonna move to lower price. You know, we'll see how she comes into lower price. Bottom line, the market's out here, folks. Okay, the S&P wants lower price, Dow wants lower price, Nasdaq Composite wants lower price, right across the board. These numbers. Time, volume, price are all hitting. They're hitting intraday, they're hitting the daily, they're hitting the weekly. This is Tom O'Brien. This is TFNN. You stay right there. We're coming right back. We have the Dow finished down 70, Nasdaq off 2.5, S&P's off 9.5. We're going to be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 50 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow Industrials finished down 70, Nasdaq off 2.5, S&P's off 10. And as we do each and every Tuesday, we have our man, Mr. Andy Heck. Andy has an outstanding show at TFNN, folks. Every Tuesday, Thursday, right after my show, 5 to 6 Eastern Standard Time. Now, he also has a great newsletter, the Technomento Commodity Report. You can test drive that right here, right now. The way you do it, you go to TFNN. You're going to go to Newsletters, which is right on the top. Trading Newsletters. You see the Technomento Commodity Report right there. You can test drive it 30 days, absolutely free. Andy Heck, what's going on?
How you doing, Tom? I'm back in kind of Godfather mode today.
Oh, I can see that. I can hear that.
I had the next round in my my wisdom tooth saga on Friday, but I'm much better today. Much better today.
Thank God.
Thank God. Hey, listen, I just wanted to let you know. Today I got appointed to be the commodity expert for About.com.
Oh, that's a beautiful thing, man.
Yeah.
Congratulations.
Thank you. So I'll be writing some educational articles on About.com.
Nice.
About commodities. Should be interesting. Just thought I'd mention it.
That's a beautiful thing, man. We appreciate it. That's awesome.
Yeah, it's good. So let's take a look at crude oil.
Crude oil. Okay.
Very interesting divergence today in crude oil. All right?
Yes.
So the oil was down sharply. We tested almost $100 a barrel on the active month WTI contract.
Right.
But if you take a look, gasoline and heating oil both up strongly today.
Interesting.
Yeah, so why did that happen? Very simple. There was a fire at the Coffeyville refinery in Kansas, which produces or processes 115,000 barrels of crude oil a day.
I see.
So what's going to happen is that inventories, and most of the oil that goes to this Kansas refinery comes from Cushing, Oklahoma.
Right.
So basically, crude oil, they figure now that inventories will build in Cushing, and there'll be less crude refined.
Okay.
So that's why we're having this big divergence today.
Wow.
We had crack spreads move big. We had the gasoline crack spread moved last week. It was about $15.
Yeah.
Today, $18.50. The heating oil crack was about $19. Today, $21.30. So, interesting. Just wanted to let the listeners
that's
know.
to keep our eye on. Okay,
Yeah, what's going on there? That's probably supportive for some of the refining companies who are refining oil away from this Coffeyville refinery.
Yeah, it's interesting because when you look at that context, it's almost saying that like refining is a localized business, isn't it? Or a regional business, basically.
Oh, absolutely, a regionalized business. Very much so.
Right.
Very much so. Another regionalized business, natural gas. Natural gas seems to have bounced here now today.
Yes, she's up, 1.5%. So what do we have here?
We're up about 5.5 cents here on the active month September contract. Listen, this thing is too cheap. Given the inventory levels, too cheap.
Yeah.
We're way oversold, and we have the EIA numbers coming out on Thursday. It's been a very temperate summer so far, but, inventories are low, and the winter is just around the corner. Just as quickly as we got out of that cold winter and we're in the heat of summer, the winter will come right back and be upon us before we know it.
Isn't that crazy?
It is crazy. And by the way, the weather here in Vegas has been appalling.
Yeah?
Oh, my God. It's been raining here like I've never seen.
Really?
Flash floods.
You're in the desert. It doesn't supposed to rain in the desert.
Thunder. Well, it's kind of monsoonish right now.
Okay.
Really, really amazing. So the weather is, weather affects all these commodities. That's why we saw grain prices again today hitting the skids. We had wheat down like 20 cents today. Soybeans were down 12 3/4 cents. Corn was down 5 3/4 cents. We're on 4-year lows in these grain markets.
So do you think that's because the expansion up was so dramatic? That there's just so much out there?
We had a big drought, remember 2 years ago?
Yeah.
And then we had a big corn crop last year. And the crop is doing real well this year. So, it's just kind of supply and demand. You're going to have a lot of supply of grains around. The only thing I'm not so sure about is wheat, because wheat, you got a lot of producers who are in funky places like Ukraine and Russia. And, anything can happen there. But the wheat price is really tanked. I mean, we're down at about $5.20 a bushel. 2 years ago, we were way over $8, $9, even $10. So we're half the price.
Man, it's a trip about this wheat. This wheat could be down at $3.20. Let me just see this for a second. So
yeah, it could. I don't think it will.
$7.50 to $5.30. That's $2.20. It's $3.40. Holy!
I know exactly what you're saying technically, but politics don't figure into the technicals there. And wheat is, if wheat was only produced in the U.S., I would agree with you. But wheat is also produced in Canada, in Australia, in Ukraine, in Russia. And I think that the Russians have been dumping wheat on the market just in advance of any potential sanctions. So we'll have to see. There's a lot of Black Sea wheat available right now.
That's pretty wild. Yeah.
So,
because if you, Andy has extensive experience, folks, with physical commodities, moving them around the world. And there's no doubt what he just brought up is that the aspect, what happened with Russia today, is that they're not going to basically, they're not really hammering them, but what they are doing, supposedly, inside of Europe, is that the state-owned banks and the basically state-owned shipbuilder that is supplying the Navy with oil and gas, bottom line is they're not going to be able to use the banking community in Russia.
Yeah,
I mean,
that's
a
problem for them.
And
that's
guess what, folks? If you don't have a bank, you're in trouble. They'll use their own banks and they'll work it out. But the bottom line is it's going to put a cramp in it. And then,
Yeah. The two commodities, though, that could really go up on big sanctions here are palladium.
Yeah.
80% of all palladium comes out of Russia. It's a byproduct of nickel production, and nickel. So, those are the two commodities that are very Russian-centric.
Yeah, no doubt.
So we'll keep our eyes on those. The other thing is the meats. The hogs rolled over. So we had August hogs turn into October hogs.
Yeah.
on the futures, and the October hogs were trading at a 16-cent discount. So now the hog price has gone from, 120 to 130 to 106. That's, because it was in a big backwardation here.
Sure.
But those beef prices, man, they are firm, Tom. They remain firm, and it's very
listen to
hard.
This. I heard this.
Go ahead.
Oh, man, this is so cool. And, the Andy folks has given us an incredible education in the commodity market in general. But, when we start talking cattle, it's a whole different ballgame. So this morning, I believe that the cattle herd, I think the number I heard this morning is that this is the smallest cattle herd since 1960. Like it's like some outrageous number that is like years and years and years ago, which is insane. In fact, we got to Google this quick because I heard this coming to work this morning, Andy. Right?
Yeah. No, I know.
That's like unbelievable.
It's crazy. Hey, Tom, the United States has never been an importer of beef. In 2015, we will be an importer of beef.
I'm doing this quick. 1 second. Here it is. Oh, there it is. 1973.
Yeah. Hey, and there's fallback from this. What's going on in China with McDonald's? That's beef related.
Oh, yeah. Unreal. Listen, folks, you stay tuned. As soon as I'm getting off, our man, Mr. Andy Hex, coming right up. Andy, have a great one, safe one. Look forward to this great show.
Thanks, buddy.
Stay right there, folks. Coming right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
you take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had ExxonMobil off 82 cents, had Coke down 33, DuPont was up 88, we had Walmart down 27, United Technologies was off $1.66. If we go over to United Technologies for a second and take a look at this baby, what you're going to see is that, we've been talking about quite a while about this February 5th benchmark. That benchmark on United Technologies 107. UT had gone all the way up to 120. Guess what? That's where it is. It's not only there, but what you can glean out of this, folks, is that what you're going to have is this. When we got down to that area, we hit that area, and we hit that area with 6.8 million shares. You're in there with 5.4 million. That is a lot of volume coming down to that area on the daily. On the weekly, the way it's set up, folks, is UT can get down to $83. So it's actually, yeah, $83. It's a big number. And the more equities that are getting down there, guess what ends up happening? The higher the contraction on the way back. And if you want to take a look at United Technologies, UTX, you're going to see how that February 5th daily, weekly, and monthly was sticking out like a sore thumb in an extraordinary way. And the bottom line is that from that 107, you did a counter-trend bounce up to 120.66, gave it back. Now United Technologies, bottom line, a month later, has given back from 2 years. No, 1 year. 1 year. 1 year of trading and 4.5 weeks. Pretty intense. If we go over to GE, GE's a stock to keep your eye on. GE looks to me like it's going to get just absolutely smoked. And it's like, why? And there's what very well GE may still have in there is that during the downdraft in 2007, where GE they had signed a lot of different notes, basically renting their credit rating. I mean, it had such a good credit rating. GE's at 25.25 and, 11.25 sticking out. That's another 50% down. So big number. Amgen, AMGN, they just come out with numbers. Let's take a look at Amgen. Amgen closed at 123. It's trading at 127 right now. And the numbers go like this. The estimate was $2.07. Bottom line, they made $2.37. The top line is that they were looking for revenue of 19.2 to 19.6. They're going to come in with 19.5. The big number on Amgen right now is that they're They're cutting 2,400 jobs. Amgen is the largest biotech company by sales, said it will cut more than 2,400 jobs and close facilities as it reported second quarter earnings that beat analyst estimates. Net profit rose 23%. The higher-than-expected earnings were driven by sales of Enbrel. The company's top drug for arthritis increased 7% to $1.2 billion. Let's see where they're cutting those jobs. Okay, so those jobs are going to get cut. Yeah, I was wondering if Cambridge, Mass. is in there. So Washington, Colorado. Oh, this is interesting. So check this out. Good old Boston. Boston lucked out on this one. Colorado, and so this is what they're doing. They're cutting 2,400 to 2,900 employees. They're going to close facilities in Washington, state of Washington and Colorado. They're expanding in Southern California and Cambridge, Mass. Cambridge, Mass is their big number, folks. And I remember when that Amgen actually opened up there, and Boston itself has turned into a biotech hub in an extraordinary way. No doubt about that. Twitter's up about $9 right now after coming out with some numbers. American Express, that closed at 91.43, 91.71 rather. She's trading at 91.43. The numbers go like this on American Express. It's going to be interesting to watch this because they made their number, but they made their number by a $409 million gain, a one-time gain, that is. The estimate revenue, top-line revenue, $8.6 billion. They took in $8.6. The earnings, wrong one. CN, let me see. Net revenue is $1.53 billion. Come on, where are you? I can't pull it up quick enough. If we do take a look at how American Express is trading, that will bring this back in a 2-year. Yeah, she's going a low price. Yeah, the way this is set up right now, American Express, not the end of the world, but you're at 91. She can get into about 75. U.S. Steel, let's go take a look at U.S. Steel. U.S. Steel closed at $27.67. She's trading up $2 right now. And numbers on U.S. Steel go like this. The estimate was $4.2 billion. She took in $4.4. That's going to be the car business, probably. Earnings per share, bottom line, 17 cents. And that's a big beat. So check this out. They were expected to lose 31 cents, and they made 17 cents. I'm surprised it's up now. Surprised it's only up $2. 27.67. We'll take it over the 28 high. We take a look at the last high that was up here. That was 31.50. So she's going to be making a run for that 31.50. That's how that is shaking out right now. Buffalo Wild Wings BWLD, that is taking a hit after the marketplace. She's down $9. That closed at 167, trading at 158. And let's see what they're saying about numbers. Second quarter revenue, $366 million. Their revenue is up 20%. Earnings are up 25%. They beat. Hey, this one's really an interesting one. They beat all over the place, but yet the Buffalo Wild Wings says comp sales for the first 4 weeks in the third quarter up 8.2% in company-owned stores, 7.4% at franchise stores. Still wasn't good enough. The estimate was $1.20. They made $1.25. The revenue estimate was $359 million. They made $366. That's where this always gets wild. And they're just hammering that baby in a big way. Let's go over to Big Blue and take a look at IBM. Oh, I know, Herbalife, HLF. So Herbalife, folks, that came out with numbers this morning. That's down $9. That's almost 20%. It's trading at $58. Had monster volume on the way down. Herbalife, by the way, you know, when Ackerman was making that presentation, that's when the stock flipped and went up versus going down. Went from 52 to 68. But bottom line, it had never taken, on that expansion top side, it couldn't take a swing point out with juice. And Herbalife has what? has a high volume low. It's going to go after, and it's going to be interesting watching this whole thing shake out. You know, I wouldn't be trading Herbalife. Don't even think about it, folks, because let these two sharks fight it out, because there's going to be a lot of blood in the water. But what you're going to see is that this high volume low that is out there at 24 wants to get tested. Now, what's really going to be cool tomorrow is this. So check this out. Right now, 47. Right now, we're at 58. 47 is the top of the low. And that was the month of December of 2013. So how we come into that number is important. And if I was Ackerman, you'd want to commit to that number next month, not this month. The reason being is that 200 million shares, and thus far we've only done 83 million shares. So the way that is set up right now, that she wants to come down to that number, the real key is going to be, as she gets into that number, will she basically get into it, number one, and will she have an expansion of volume as she gets into that lower number? What we have inside the SPY right now and the NASDAQ 100 is that we closed at 196.95, and bottom line, that's down at 196.82. That is the SPY. We take a look at the Qs. The Qs closed at 96.60. Now that's still trading at 96.60. The small caps, the IWM, what we had with the IWM, she closed at 113.34, and that's trading down about 6 pennies. This market right now, folks, is building cars to get into that February 5th swing low. And the February 5th swing low, just really want to see how low that is. That's dramatic inside the S&P. We're at 1969. Inside the S&P, we're talking about 1737. That's a big drop. And, inside the Dow Industrials, if we take a look at that number inside the Dow, if you want a headline number, we're at 16,912. That number on the Dow is 15,340. So what's that? $1,600 in the Dow. And the NASDAQ Composite, what we're talking, and what's really going to be cool here, the composite, we're at 4,400, and we're talking 39.68. So that's a big number. What we are going to be able to glean out of this market is that United Technologies has already hit there. Boeing is close to those February 5th levels. And if they can't hold those February 5th levels, guess what? That's saying that the S&Ps won't hold them either, and this market has a long way to go south. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
Tom O'Brien.
Welcome back, folks. Don't forget, folks, at TFNN, we do 10 hours of live programming each and every trading day. We start at 8 o'clock in the morning to 6 o'clock in the afternoon. It's all live content. Right after my show here today, we got our man, Mr. Andy Hecht, our commodity expert at TFNN. Now, all that programming, you can get a couple different ways. A lot of different ways, actually. You can take it on your cell phone, TFNN.mobi. That gives you a full audio stream. You can go, you want to get Tiger TV, which gives you all the charts embedded with the audio. Just go to TFNN.com, and on the right-hand side, what you're going to see is that you're going to see Tiger TV playing right there. You just hit that Tiger TV. Guess what? You'll have the audio, you'll have the video, you'll have the whole ball of wax right in front of you. It's very easy to do. And if you do enjoy the programming at TFNN, folks, please tell 3 people. We really do appreciate it. So, markets out here, what are we looking for? Bottom line, we've had a lot of numbers come out after the close. Right now, Amgen is the only one that I see that's up substantially. Amgen closed at 123. It's at 130 right now. That will affect the IBB. The IBB is the NASDAQ biotech exchange-traded fund. That closed at 254. Right now, she is at, interesting. She's at 254.73. That should pull up a lot more than that. I expect, though, she'll bump up a bit. The last high is 260 out here. We'll see whether she get to that point. Right at this particular point, I can tell you, I'm short that index. When I look at that, that's a short position. So we'll see what it does to the other equities that are inside the IBB, because what you have inside the IBB, Celgene and Gilead are the largest weighting structures, but Amgen is right behind them. Amgen's 8%, Celgene's 8.6. You get Gilead 8.5. CELG, let's go take a look at this for a second. CELG, and I suspect what you have with the, Celgene, there's a dead cat bounce out here today. Gilead, G-I-L-D, that went up $1.53, and she would need to close, we are at 92.99. Yeah. Actually, I needed to close 2 pennies lighter on that. So it's going to be interesting to see how Amgen trades tomorrow. They did make a lot of money. One of the things that they also did, though, is that they're canning a huge amount of people. Let's go over to take a look at Amazon, because what we've had with Amazon is this, folks. Amazon is one of the first equities from the 2007 bottom to go up higher. It's also one of the first equities that have topped out in 2013. It actually topped out December of 2013. That's when it hit 405.63. It tested it right at the beginning of 2014. It hit 408.06 for about a heartbeat. Then what did it do? It went from $408 down to $284, straight down. You just finished a counter trend bounce. You got it up to 363. We're at 320 right now. This equity is screaming of a large ABC structure on the way down. And you talk about a destruction of wealth. You had the upside here, no doubt, but the downside in this equity is dramatic. The downside in Amazon is about $1.25. And if you don't think it can do something like that, if I bring this back a little bit further for you, you'll see that Amazon basically not only has a characteristic that it can do it. Amazon had gone from 101 in 2007 down to 34. So we're down 66%. Now, the difference is, and this is where it's always important to look at percentages versus point moves, because that move there was down 66%. If you ever go down 66% off $400, okay, that's insanity, folks, okay? That's $280 down, which gives you, what, 280, it gives you $120 stock. But guess what? That's how this thing's set up. It's set up at 145, So if you deal with percentages when you're looking at how things go up versus they're going down, that's really important to really wrap your head around. Gold contract out here, divergence, no doubt. What I'm looking for, folks, is this, though. I'm looking for higher prices in gold. We're $12.98. What I'm looking for is that as we move into tomorrow, there's going to be huge volume, huge volatility. You get the Fed meeting out here. 1346 is game. That's how this is set up right now. You can absolutely expect the volatility to come in the S&Ps, the gold market, the bond market, all of the above. Make sure you get enough sleep tonight, folks, because you get the GDP at 8:30 in the morning. You get the Fed minutes not the minutes, the statement that will come out in the afternoon. They started the Fed meeting today, going to tomorrow. That's going to affect the bond market, which affects everything. Bonds right now, we're going topside. The 10-year is pushing with volume. The 30-year already took out its high with volume. Now, that's saying you're going higher. And if you want to know the difference in the correlation between bonds and the market, the bond market, folks, has continued to go higher with higher volume, pull back with lighter volume, versus the S&P had been going higher with lighter volume and pulling back with big volume. Inside the S&P, though, guess what? Inside the S&P, what you've had is that you have a few of the large caps come back with a vengeance. If you take a look at Boeing, Boeing's at 122. It just came off 138. It's going after the February 5th low. United Technologies, as we saw earlier, has already basically got into its February 5th low with volume. And it looks like today what we have, I've been waiting for this baby to happen, was 3M. 3M looks like a crack today. It got up to the price point of that 146.27. We really wanted to see it hit 146.43. Bottom line, missed it by a few pennies. Would have been nice if it hit it. Sold off from that area and basically sold off with a vengeance. You know, the sale on this was a decent sale. Going into a swing point, I've had, someone dumped this right on the close in a big way. 232,000 contracts. Shares, rather. If you'd like to test drive my daily newsletter, folks, or the gold report, you can do both by coming over to the website at TFNN. You go to newsletters. If you'd like to test drive the gold report, go to investment newsletters. You can test drive the gold report 30 days absolutely free. If you'd like to get my daily newsletter, Market Insights, at newsletters, go to trading newsletters. You can see Market Insights. You can test drive that 2 weeks absolutely free. You stay right there, folks. I'm Mr. Andy Hex. Going to be coming back. Always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it. Take ownership of it. Fly with it. Thanks for being here, folks. Have a great night, safe night. You stay right there. I'm Mr. Andy Hex, coming up with an outstanding hour talking about commodities. Whenever, look forward to speaking tomorrow, folks.